Good morning again, everybody. It's Michael here with your latest supply and demand market report. This video is looking at the metals and the agricultural complex. I hope you've all had a good trading week. Before we start, just a reminder that this is purely for educational purposes. I'm not a financial advisor, and it's the ideas we share and not a solicitation for you to do anything with your money. And with that, we will start off from where we left off last week, looking at silver. So silver had a really strong week. We've had a change in momentum. Remember, we were looking at this market flagging, and usual conversations using traditional technical analysis is that these tend to be bearish. But as we all know, also in technical analysis, with failed moves often come really fast moves. So if something is supposed to happen and it doesn't, and it goes the other way, it tends to be really rapid, and it's just sliced through any sort of supply that was overhead, and it's now aiming for this supply zone above. We'll see. It looks like it wants to get there, but it's leaving behind levels of interest for us. So we will see what happens if and when prices pull back to this demand zone in here. Ultimately, we still have the lower levels that we wanted to get to, which are, down in this area, which is the weekly demand zone. We haven't gotten there yet. This move in the last week is suggesting we may not get there, but time will tell. For now, it's definitely the fact that we're taking out supply on the weekly, suggesting this market is trying to form a base. Whether that base will extend as low as this, I have my doubts, because, as I said, we are forming demand levels now at a higher level, which suggests again that demand is coming into the market, and we may not fall as much in order to get new entries, but new levels will form, don't you worry, and we will be able to partake in those. Okay, so let us go on to, we'll do gold because they're similar. So gold also had a strong week, but unlike silver, gold hasn't removed the supply that it had. I'm going to take out this box that we put in last week just so it's clear for you guys. So this supply zone, as poor as it is, gold has not been able to take it out yet. It is definitely rising from this demand zone that we've talked about ad nauseum every week, and you guys know my reservations about trading it. Because of where it's located, you can see where it's not down, just like we saw in silver, that it hadn't reached its weekly demand. This level was just outside that weekly demand, which was why I was not so keen on it. And then we formed this level of supply just above it, which again would have cut into the profit margin, so made me even less keen on it. But on a smaller time frame, it looks like a smaller head and shoulders pattern may have been formed, that will be clearer probably on an intraday time frame there, and we've now broken out. So there will be traders who will be looking for potential buys again in this one, although it's different to silver because the move away is not strong enough yet, and the quality of the low zone, in fact the whole zone is probably more like that. It's not big enough just yet. The move away is not big enough just yet for us to be interested in it. So I'm just going to take this out, clean this up a little bit. So yeah, the level, the better level is still down here, just like in silver. It's lower down. But if we start to turn from where we are now and start to go higher, we will form new levels. Maybe even this one that is forming here might be one, depending on what happens. If prices break out to the upside from here, we might form a new rally-based rally, in which case it might be a new demand zone we would want to take. But ultimately, we need to take out this supply. We need to take out that level for us to be, super sure, which it never is. It's never 100% certainty, but to feel better about the possibility of the trade, the probabilities of the trade. Yeah. Okay, let's go back to palladium, and palladium is still grinding down. It is pulling up into a very ugly supply zone. The wick is massive. It's not the kind of zone that I like to trade because it makes me realize that the supply is actually higher. So it's always a question mark as to where within this zone, unless you want to take the whole zone as your level, which is also possible. The trend is still down. Obviously, we haven't taken out any supply zones. The move away from this level is not good at all, so it's not a level I would trade. I note that it is supply, but it's not the quality that I would trade because the move away is really rubbish. So nothing to do. Let's take a look at what's below us actually. So the next level below us that we're looking at is in and around here, in and around there somewhere, which is actually where we're reacting to, it seems. So that is interesting. But where we get to in this whole move down is what is not clear, because the drop has been so patchy. It's been a significant drop, but it's just tested itself all the way, so that there aren't really quality levels. You see the tests were there, so nothing to do right now. Let's just see what we have. It might start to base around here is what I'm wondering, if we start to base in and around here for a little while, given that we've gotten to a significant zone on the weekly. We might end up basing for a little while here and trying to form a base. We'll see. Okay, and we go to platinum. Platinum is coming up. Platinum is coming up to an area of supply. We are into one right now actually, which is just outside that whole huge weekly area. If you're trading the sorts of set and forget, you see this is when the markets have accepted the imbalance. After they dropped, they stayed away for at least one period, and now they've rallied back into an area of interest. We have other areas of interest just above as well, in this area, but this is the first one, so we'll see how the markets react to that. It's looking promising, this level, so bear that in mind. We'll see how the markets interact with this. Let me take this one out. It's an interesting level. Again, it's an okay move away, the initial move, but the total distance moved away is really good. The initial move is, doesn't score too great, but it's all right. It'll pass. Just about an average candle, really an average departure from the level, but the return to it has been really, really strong. So yeah, we'll see how markets react to that in the next week or two. And that will be that. And finally, we'll go to, in the metal complex, obviously, we'll go to copper. So copper is also in a big area here. And if I take you to the 4-hour chart just really quickly, it is reacting off of the 4-hour zone inside there. That's what it's dealing with. It's an interesting idea. We'll see how that pans out. We know that we are negotiating a weekly supply zone that took out levels of demand. It took out those lows. It took out those lows. So a rally back up into that level now. First time in, came back, and second time in again, basing basically, still keeping these lows intact and trying to see if it can go higher. But it has reached an extreme, a zone created in there, which removed, if you see on this daily chart, it removed that level. This was a level of interest that we talked about, and I was talking about how the move away might not be enough, the minimum 2-to-1 that we like to see, and urged you to assess it. And you can see prices have now gone through it, but we've gone to the higher one, which is better located, and better move away, better distance traveled, and it's come screaming back into it. So we'll see how that works out. Okay, I think that was it for the metals. So let's go to corn. So someone asked for us to look at the futures contracts, which I've added here, which is fine. I was looking at them when I saw the comment in the chat below last week's video, so I thought I'd do it for the subscriber who asked for it. So we'll start with the corn futures, which is slightly different to the something for CFD traders to note. I look at the corn futures and soybeans and wheat. I just didn't used to include them in this video, but the gentleman who asked, it's worth pointing out that if you look at the corn for the CFD, it's very, well, I say very, it is different to the one for it is different to the one for the futures. The futures is obviously the more accurate market. The CFD markets are synthetic markets created by brokers to replicate the movement of the actual futures contracts. So, or the underlying market, I should say. So, if you're going to be trading corn, sugar, wheat, soybeans via CFDs in countries like the UK or other countries that allow you, I don't think they allow you to trade CFDs in the US. You're limited to the futures market. So just make sure you have a quick look at the actual futures underlying markets. And so we will be doing this one from scratch, which is really cool. I don't think we've done it for the other videos, but it's been weeks. So looking at this one, we are negotiating that demand zone. We've got supply all the way up there, which has embedded zones in there. You've got the drop base drop in there. You've got the rally base drop with a gap. The biggest representation of an imbalance in price is a gap, and we've got that in there. So, and for the demand, we are beginning to try to hold. We're traded above these highs, but obviously we need to get much higher. We do have supply in here we do have supply in here, which would be the first level to negotiate with. A little trick you might want to consider is where this is located relative to the entire move. It might be something as a sort of odds enhancer for you to look at, but it is a level that's taken out, multiple levels of demand below. Yeah, it's a little bit low for me, but it's the first one. When the market has had such a capitulatory move, I tend to be very skeptical about these first retracements. It might be the one that holds as we go up and try to base. It might be the one that will hold and we start going back and forth into it for a little bit as we try to define a direction. Because these kind of sudden moves tend to catch a lot of people out, and not a lot of people are short yet. Anyone who was shorting after this market, shorting right into a qualified demand zone, it's not going great for them right now. But there are a lot of people who would have missed out on this big move. It caught a lot of people, napping, as the markets do. So they'll be looking for the second entry to go short now, which will probably come up. I'm wondering how feasible it is for us to say we're going to go from where we are now all the way back up there. That will be a significant move to the upside, which is not impossible. I'm just wondering about the likelihood of it. So those are my thoughts about the corn futures, and let's go to wheat futures. So wheat, the CFD is actually similar to this one in this case. We've got this was the one we were looking at before. That was the corn one we looked at last time, and we were talking about it at this level. It's taken out that level and gone up. But when you look at, just jumping around a little bit, when you look at the corn futures, it's actually still in a demand zone. So going to wheat again. So wheat is similar to its CFD market, and it is trying to negotiate a new demand zone that's been created with the move up a few weeks ago. And that's what it looks like on the daily chart. You can see it's a little bit messy. So in terms of finding embedded zones, for those of you who trade the set and forget embedded type of trading, it's a little bit challenging there because there wasn't much clarity. The drop base rally at the extreme is clearer embedded within that zone. So prices may still come back down there. They're trying to get above these highs here. Not quite done it yet, I don't think. Let's take a more accurate look real quick. So that's 682, and this one is exactly the same price. So it's right there. If it's going to end this whole drop, it needs to get above that high for us to say this drop has ended, at least temporarily. Whether it reestablishes momentum to the downside, time will tell. But going long, if we do break above those highs, then you may start to see some interest if pullbacks happen to that level. But for now, it hasn't happened just yet. Okay, and let's go to soybeans. And soybeans has been in the opposite direction. Soybeans has come up, leaving, this is soybean futures now, leaving behind huge demand, taking out supply level after supply level, and it's now onto its third supply zone, and that's where it's finding sellers trying to stem the buying right up into that area. So you can see we've had a pullback, but no real quality demand zone for us to say that, you know, the trend has changed. We've got some supply here, but notice the location of it. It's just outside the demand. So the demand zones of interest, if you're trading the set and forget types, are these ones in here. That one is a little bit too, you know, it's not not well located for the way that I trade. I prefer to trade into the levels, particularly if we start to move down from this daily chart here. So that's what we've got. In terms of going short, it's the lower probability trade, just because the trend has changed on the weekly chart. So going short might be a bit tricky. You can see again, they did try to take it short and try to come down there, but then went to new highs, and now they're just holding. Again, whether this is absorption, like I mentioned in the previous video, these type of patterns tend to suggest absorption. When you go into a level, you come back and you go in deeper, and then you don't fall. Or if you, in the case of demand, you don't rise. You're just holding there. It suggests there's a chance that they're looking to try to absorb all the supply and go up. It could still ultimately come down, but you know, this is not, if it was going to come down, it usually would have done it quickly, like what it did here. Doing that suggests there's still more work to do for the sellers before they can bring it down in this direction. Okay. All right, and I think sugar was the last one, and we'll be done with that. So sugar is caught in between. Sugar is in no man's land, really. We've got supply above, we've got demand below, and it's just in the middle between the two of them. So nothing to do. It's in probably the most dangerous, unproductive location to be trading it right now. You need to wait and see what it does from here. If it goes up to supply, start looking for opportunities. If it goes down to demand, we may want to take any profits we have if we're already short. And for those of you who trade the counter trend style, you may want to look for opportunities for it to take it for a quick bounce. But for now, it's a sit on your hands on sugar. And that will do it for the metals and the agricultural complex. Thank you for watching the video. And if you haven't subscribed to the channel, please do. And like the video for the YouTube algorithms to pick it up. I'll speak to you all again real soon. Take care, everybody.